The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Scorebox Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos, and these are your headlines. The US and Iran agree a plan to end the war and reopen the Strait of Hormuz, with a deal on Iran's nuclear capabilities set to be negotiated over the next 60 days.
Crude prices tumble towards the $80 mark as President Trump declares let the oil flow. Equities surge in the Asian session, with European and U.S. futures also poised to rally.
The US limits access to Anthropic's most advanced AI models, prompting the company to suspend access altogether.
And President Trump taking aim at France, demanding it ditches its tech tax or face a 100% tariff on wine exports, just hours before touching down for the G7 summit in Evian. The United States and Iran have reached a preliminary deal to end the war, with a signing ceremony planned on Friday in Switzerland. According to the US President Donald Trump, the agreement includes the toll-free reopening of the Strait of Hormuz, with Washington's naval blockade to be lifted. Well, the oil price began falling, of course, at the tail end of last week and continued to fall in today's session when it opened late Sunday evening, down 4% on Brent, currently down to 83.73. That is the lowest level we've seen in the last 3 months. The US benchmark down to 80.90. Although I'm sure you're all aware, these levels are significantly higher than the levels we saw before the conflict started. Let's get to Dan, who joins us with more on this as well. Dan, there's a lot of things that can happen that can go wrong between now and Friday, including the Israeli action in Lebanon. But just talk us through the details as you see it.
Steve, good morning. Good morning, everyone. Well, look, Steve, I think you make a great point off the bat here. The path from here to Friday still matters. The path beyond that will also be really critical. This all came about after Pakistan's Prime Minister Shehbaz Sharif, who of course mediated the negotiations, announced this agreement on Sunday. President Trump confirming it shortly after, declaring the deal complete and authorizing the reopening of the Strait of Hormuz and the removal of the US naval blockade. An official signing is set for Friday in Switzerland. And Friday's signing is also shaping up to be the moment of truth. Of course, with days to go, we still don't know who will actually be in the room. And the guest list itself will tell us how real and how broad this deal truly is. On the Iran side, so far, the only official that's been publicly linked to the signing is the Deputy Foreign Minister. Iran's Foreign Minister Abbas Araghchi and the Parliamentary Speaker Mohammad Ghalibaf have been kind of the face of these talks and may be the senior signatories if they attend. But again, there's no confirmed list. If Ghalibaf does appear, then it could perhaps signal buy-in from Iran's conservatives and the security establishment. And if the senior security advisor Ali Shamkhani is there, then it would also suggest that perhaps this has sign-off from the supreme leader himself. So watch that space. On the US side, it's also unconfirmed who will attend. Iran, of course, right now doesn't have a diplomatic equivalent for President Trump to meet. So the president himself may not actually attend. Of course, stranger things have happened, but it's not quite certain exactly who's going to show up. The White House had reportedly been weighing sending the Vice President, J.D. Vance, and the envoy, Steve Witkoff, who of course has led the U.S. track. He is a likely participant, but again, we don't know who will be there. I think the real tell is who shows up from the region. Pakistan's Shehbaz Sharif, who brokered this, is expected to attend. Qatar, also deeply involved throughout, is probably the most likely Gulf state to be represented at a senior level. The biggest signal of all is whether Saudi Arabia and the UAE send cabinet-level representatives. If they're physically in the room alongside Qatar and Pakistan and the US and Iran, then this becomes more of a bilateral ceasefire. It becomes a deal with broad regional backing, and that's what we'll be watching for on Friday. So a lot could happen between now and then. And of course, this deal also hangs in the balance because we saw those Israeli strikes on Sunday against Hezbollah inside Lebanon, potentially threatening to upend this from the start. The extent to which the Israelis are going to buy into this agreement also remains to be seen. So far, Netanyahu suggesting that he has distanced himself from this US-Iran negotiation track. The other point to make is that the 60-day negotiation window that follows this potential signing on Friday is also going to require both sides to tackle some really big issues, some of the most contentious elements of this deal, including the financial arrangements, which we still don't have much clarity on, and also the technical negotiations regarding Iran's nuclear program, where both sides still seem quite far apart. The president has said that he wants an agreement to rival the JCPOA. That remains to be seen. It's also unclear what the exact terms of this MOU are and if they will even translate into a wider deal. For now, though, markets seem happy to cheer this on, and we could very well be starting to see the beginning of the end for this 4-month-long conflict. It's back over to you.
Dan, we do appreciate the very much in-depth reporting there. Thank you so much. Let's peel away and take a look at those US markets first up. We had heard some suggestion that investors may be leaning into some of the narrative on hopes there could be a deal, and we saw that play out stateside in that Friday session. Modestly upbeat on the S&P and the NASDAQ, but stronger on the Dow, 0.7 off, and in fact just perched off its record highs. In terms of the distance off the record highs now, as we talk about what's left for risk assets and how they may respond from here, keep in mind on the NASDAQ, about 4.8% off the record highs, about 2.5% off the all-time highs on the S&P 500. So closely watching US markets in reaction this morning. Asia has already been reacting to the news flow, and this is what it looks like. It's a pop, and you've got to say it's those tech-heavy risk-on areas of the market from Japan to South Korea, where we're seeing most of the concentration of that appetite. Very strong ranges of more than 5% versus just over 0.5% on the Hong Kong market and 1.25% on Shanghai. Not bad in terms of responses for the China market, but you can see that euphoric reaction still around the tech names where investors want to be invested. Almost another reason now to just deploy more funds off the sidelines, but into the same areas where it's already been going. And when it comes to European markets, and that is a big question, what has picked up this morning, where investors get back in? We are watching very strong ranges on some of those futures. We saw it in terms of the action that happened on the Friday session. We're up 1.9% as we wrapped up the trading session Friday, and this morning we're chasing another 1.6 on the 50 futures. The FTSE futures a little bit tamer, as you can imagine, because of the big drop in the oil price, the 4% that's come off the spot price. But DAX futures, the industrial companies, some of the banks, the areas of caution in Europe because of the energy price. This is where we're expecting a snapback this morning, and we've seen other days where this playbook has been very evident. Some of the travel and leisure names will be watching that closely this morning too. Well, US futures ahead of the session. This is how it looks. More than 1% on the S&P 500 and even stronger on the NASDAQ. And that is, again, the technology concentration, about 2% there, Steve.
Thanks, Karen. George Polak is a senior analyst, US policy at Signum Policy Advisors. George, the initial aims from the president, well, they were varied from this conflict, including some form of regime change, denying nuclear capabilities, limiting their missile-stroke-ballistic capabilities, limiting the proxies that Iran was able to operate with in the region as well, and neutralising the Iranian Navy. These are just 5 of these so-called stated aims. What kind of mark will the US political establishment and the US voter give the president now we seem to be on the track to a resolution?
I mean, I think you've already seen it from Senator Lindsey Graham, who put out a tweet yesterday, laying out how he expects Vice President J.D. Vance to appear before Congress to present the deal under the confines of the Iran Nuclear Agreement Review Act. Lindsey Graham is trying to pressure Vance because he's unhappy with the deal and feels that it does not address the fundamental concerns many in the Republican Party have. Moreover, for the American voter, I think while they will be content with the fact that oil prices will fall, diesel prices will fall, and there'll be less inflation and more economic stability, I also think, by and large, you'll see it as U.S. has lost a war it started, and that while we are returning to some kind of status quo, we are returning to a status quo that very clearly benefits Iran.
Yeah, George, lots of points to follow up on. I'll just follow up on one, if I may. The Iranians perhaps have realised they don't need a nuclear weapon anymore in order to paralyse the global economy. That is something that was palpably obvious to generations of US military planners. Why did the US get that part so wrong this time round with the so-called surprise that the Iranians were able to shut the flow of product via the Strait of Hormuz?
I think the administration came into this war starting after the protests in Iran, where we saw the Iranian government respond hugely harshly with the idea that if they started these attacks, if they took out the senior leadership of Iran, that the Iranian people would be able to take over, and that as they continue to degrade Iranian capabilities, the government itself would feel compelled to negotiate with the United States. Obviously, the Iranian government held out strong, and the Iranian people did not feel comfortable taking to the streets and doing what the administration envisioned.
Yeah, and just on that point, George, the Iranian theocrats, the quite awful regime that runs the country and denies so many liberties, is still in place, albeit with another figurehead. A figurehead, of course, who is the son of the previous Ayatollah. Plus, the IRGC seems incredibly strong still. That is a massive failure from Israel and the United States, isn't it?
It absolutely is. And that's why I think you're going to see Republicans very uncomfortable with this idea that the president has discussed, where this current brand of leadership is the most rational he has dealt with. I think a lot of Republicans do not view these leaders as rational, and they view the president with concern of the idea that these are people he can talk with. They do not agree with that.
George, it's a bit like buying a property, I suppose. You've got the exchange of contracts, but you don't complete until sometime later. We have the announcement Monday, the signing on Friday. What are the main potential roadblocks or obstacles that could derail this between now and then?
I think, as your colleague Dan was setting out quite effectively, one is Israel. Two is it's a response to Lebanon, because Bibi Netanyahu is not operating in a vacuum. He has elections coming up in October. The people in the north feel completely nervous by the presence of Hezbollah and what that might happen after October, in the wake of October 7th. And there's also the claim that Iran is getting up to $12 billion upfront before we even get to negotiations. That's going to cause Israel heart palpitations, and that's going to also cause Republicans and even some Democrats in Congress concern, as the idea will be this funding may go to the good, may go to human needed things for rebuilding Iran, but that means there'll be more money available to rebuild missiles and to help proxies.
And then in terms of how this plays out, let's be optimistic. Let's say we get to Friday, there's a big signing in Geneva, peace looks like it's achievable. How does this filter through to the US economy and the rest of the world when the oil starts flowing again? Presumably, there's going to be a massive delay of months where we still feel the inflationary impacts and the effects of all this before we start to feel the benefits of a peace deal.
And I suppose you're getting at the biggest critique of the administration here, is that they've been saying that for months now, that once this war ends, the oil prices will drop like a rock. But the reality is production has been turned off. Turning it back on is not as simple as flipping a switch. And that while there may be and they may have set expectations, especially for the American consumer, that gas prices will return to what they were before the war. As you said, the reality is we're going into a place where prices will continue to be elevated. And come August, September, when voters are heading to the polls, gas prices will still be at the forefront of their minds. And I imagine, as we've seen already with shortages and beginning part of the war in places like Australia and then places in Africa and the Philippines, I imagine they'll continue to be concerned. And while Iranian oil, U.S. oil, and Gulf oil will continue to backfill, we still have lost billions of barrels that have gone out of production and will take years to recover from.
George, the question is what we're left to in terms of the toll booth that had been erected. A suggestion now that we may have Oman, along with Iran, trying to monitor flows of oil through the Strait of Hormuz, almost like a toll booth that was erected that is not taken down for future use. How do you think about the consequences of that?
I mean, I think the consequences are pretty severe, at least both politically in the U.S. domestics, where on February 27th, while the idea may have been that Iran could take the strait, there was no toll booth. Now we're coming into the middle of June and they can now make a toll booth. From a political angle, from a domestic angle, that's something the president can't really claim as a win. And moreover, I think it reasserts Iran as a regional power in the Gulf and puts pressure on our ostensible U.S. allies like Saudi Arabia and UAE, where they now feel that Iran, just like the U.S., has cards to play and puts them in a place where they have to be nervous for their futures.
I want to ask you about the future for the region, because going into the war, we actually had a golden backdrop for a lot of those Gulf states. The amount of money that had been pouring through into building out technology, the rationale, all that cheap energy just sitting there, connecting that up to data centers would be logical and beneficial. Now, of course, we've got the geopolitics here and the security of the region in question. What happens? Does it simply just bounce back because it's got deep pockets? It can engineer some sort of revival? How do you think about that part of the world?
Well, I suppose you can ask whether or not it'll be like a trampoline recovery. And I think the one positive is, and I suppose this speaks to the Trump taco theory, is that this will take 60 days. That'll be in August. The president will likely be very unwilling to go back to war with the midterms approaching in November. And once we get to November and November, December, and January, the president will likely be wanting to move on to focus on other foreign policy legacy items, which will likely give the region some time to recover and also recalibrate its expectations, recalibrate its developmental goals, and what it actually wants to attract. And moreover, as you laid out with energy, as long as they can bring back production, I think in the industry and development will still happen in the region, and it will still be an attractive place to invest.
George, as you talk about Trump moving on, we know, and we've seen this playbook before, as soon as that one situation, one crisis is seemingly solved or put to rest to an extent, he moves very quickly to something else. And already we're hearing the talk around tariffs again. Is that an issue? Should Europe be worried that we're facing fresh tariffs? Should other parts of the world, Chinese, be concerned about more tariffs? How are you thinking about that policy?
I think especially as we get closer to November and the lame duck period of the presidency, I think Europe should be concerned about the future of tariffs. Because if you think about it, one big part of the president's legacy will be his tariff wall that he's built around the U.S. and in his mind, the revenue that it has brought into the American economy. And that means as he goes back, as he looks around and sees, has the EU lived up to his expectations? Has the UK lived up to the expectations of its deals? He's going to say, no, you haven't. And you need to turn around and actually meet the agreements we've met. And while IEEPA is no longer available as a tool, he still has Section 232, he still has Section 301, and there are other tariff authorities that while have never been used in U.S. history, they are still on the books.
Thank you so much for joining us today. George Pollack with our senior analyst, U.S. Policy, Signum Global Advisors. President Trump is due to depart the U.S. shortly en route to the G7 summit in France. The U.S. leader will hold bilateral talks with French President Emmanuel Macron, as well as the leaders of Qatar, the UAE and Egypt. Tech and artificial intelligence will also feature prominently, with OpenAI chief Sam Altman attending, reportedly alongside executives from Anthropic and Google. The summit will finish on Wednesday, with Macron hosting Trump for dinner at Versailles. For more on what to expect from the summit, you can check out CNBC.com.
Still to come on the show, the UK and Europe weigh their responses as the US limits access to Anthropic's most advanced models. We'll have the very latest. Plus, Keir Starmer reportedly prepares to roll out a sweeping social media ban for under 16s. And as the G7 leaders meeting kicks off, we'll speak to Ukraine's former Foreign Minister, Dmytro Kuleba. That conversation at 9:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. SpaceX shares are called higher before the bell after the company went public in a hugely anticipated IPO, which broke records and made the CEO, Elon Musk, the world's first trillionaire. Shares closed almost 20% higher on its first day of trade, giving the company a valuation of more than $2 trillion and making it the sixth largest in the US by market cap.
The UK and Europe are figuring out their responses after America limited access to Anthropic's most advanced models, prompting the company to suspend access to those models worldwide. On Friday, US Commerce Secretary Howard Lutnick reportedly put export controls on the company's Mythos and Fable models after Amazon researchers found a vulnerability in the software. Now Europe says it is, quote, looking closely at the practical consequences. Meanwhile, UK media reports suggest government officials held talks with Anthropic and the White House over the weekend in a bid to carve out an exception. Arjun joins us with more. Arjun, a couple of things jump out. We were only reporting on the launch of Fable 5 last week. Apparently guardrails on it, safe for use, and here we are, it's been pulled back from the market. The other point is that Amazon And the backdrop here does tell you how competitive it is, researchers working on each other's models, trying to figure out the flaws.
Yeah, absolutely. Look, first things first, it's important to understand what the capabilities of these models are. Mythos really hit the market, and the excitement was about the fact that it had these advanced cybersecurity capabilities able to find flaws in software. Fable 5 was effectively the customer-facing version of that, a very advanced model, which Anthropic says it has built safeguards into as well. The issue, and one that you're alluding to, is Amazon brought up, is the fact that there could be a jailbreak, i.e. a workaround some of those security features that Anthropic's put into Fable and Mythos as well. And that is where this concern has stemmed from. Many implications here. One of those is certainly the competitive environment. Amazon is an investor in Anthropic as well, but also is trying to carve out its own sort of AI pathway. But bigger than that, I think there's the few sort of implications. One is this a new frontier for regulation of AI models? That the fact that a government could sort of step in and pull the plug on it, is that something that frontier labs need to be prepared for?
But as you say that, just pulling the model is one thing, but how are you ever going to regulate it if there are going to be workarounds in the future?
Incredibly hard. It's going to take a big technical know-how from regulators, which is not something they necessarily always have the expertise in. It's incredibly difficult, and we saw that sort of voluntary framework signed in an executive order by President Trump, sort of saying, well, these companies have to submit their models for testing, again, voluntary. But the second, I think, big implication here is around tech sovereignty, a massive discussion in the European Union, and the EU's been talking about it for ages, the need for its own models, the need for its own infrastructure, etc. And this basically shows you why. Imagine there was critical infrastructure or something very important built on some of these models, where overnight a government could just pull the plug on them. That could be a very dangerous precedent. But the reality is the EU doesn't have an equivalent right now of a Mythos model. Mistral is probably its best bet, but it's still trying to catch up to what's happening with Anthropic and OpenAI. The infrastructure is still being built so much on US tech stack. And so that is still an issue. And so this could be a boost for some of the local players, but clearly these US frontier labs are still very well ahead. And I think this exposes where all that power lies when it comes to sort of the capabilities of AI right now, sitting very squarely with a lot of those US firms.
Arch, thank you very much. We'll speak again later. Our next guest's portfolio includes ByteDance, Grail and Agibot. And in a previous role, he led early investments into high-profile Chinese tech companies, including Tencent, Baidu and Alibaba. I'm talking about Patrick Zhong, who is the founding managing partner at M31 Capital. It's an impressive portfolio and list of investments there, Patrick. What's on your radar at the moment in terms of where the next big things may be coming from?
Well, I think everybody is talking about AI now, but I'm going to take a step back. And Professor Jeffrey Sachs and I were going to spend the next 43 days retracing the journey of Marco Polo. And the whole thing for me, being an investor in my life, is all about learning. So on this trip, we're going to bring the wisdom of the world to the road. Many of my friends will fly to meet with us. We're going to have deep discussions about a lot of things. So I think we're between the two eras, and we are human, we're analog. We are leaving the analog world. We're entering a world defined by more of exponential growth as opposed to linear growth we've been used to. AI is a catalyst, but everything else will move, will reshape in our society, and we are human-centered. So for me, my investment will follow the narrative, but it's multiple narratives. And there are many nations in this world, and we live in different geographies. And with this trip, we're connecting 12 countries, traveling over 15,000 kilometers. And on this trip, you're going to see a lot. And you see, I mean, all of us, and especially we're investors, we think we are in the global trotters. But essentially, the meaning or the form of, and we're hopping a lot when we get on the flight, and is 14 hours later, and you show up at a different continent. From Hong Kong to London, it takes about 13, 14-hour flight. But when our ancestors travel, even just my grandpa's generation, when they travel, they really don't skip anything. It's kilometer by kilometer. That's how they travel. So I think for investors, you should really go back to the old starting point. That is, we are trying to invest. We're trying to make money. We're also helping the society advance. So you needed to hear all these different signals. And we have a lot of information. Unfortunately, most of that is noise. We're looking for signals.
Right.
But you needed to be
Right, Patrick,
really
let me just jump in here, Patrick. While you embark upon some soul searching, I wonder whether you have time for that, because China tech itself feels like it's under pressure. If you look over at Silicon Valley and what the NASDAQ is doing, it is on an absolute tear, record after record at any given week or month. But China tech is becoming somewhat of an unloved category thanks to the margin squeeze, the heavy investments required, and some of the competitive, intense pricing pressure. What is it going to take for China tech to break out of this story?
And I tend to think with a little bit longer horizon. I think it's at the end of the day, it's all about if you have a delta of knowledge. So I spend a lot of time traveling around the world, half my time, but I do spend half my time in China, visiting companies and feel the vibe of the change. And what's going on with China? So capital markets is one thing. Capital markets in the end will reflect the true value of the businesses. And I have a friend, she owns a very large business in Latin America. She comes to China a lot. I asked her, why are you coming to China so much? You're closer to America. And this is what she said. She says, when I'm in China, I feel tech. I feel tech everywhere, every day. I feel the change of tech, and every 6 months. So I have to keep coming back to China to buy, to shop for my own businesses. And also she says, in America, tech is very advanced, but you don't feel as much in the day-to-day life. And the equity story is where tech becomes such a big story.
Patrick, I want to just follow up on where you started. I was fascinated your reference to Marco Polo. And look, my knowledge of Marco Polo is that he brought the amazing knowledge to Europe of China, its culture, its commerce, its technology as well. Spin forward to now, and I can't help thinking that in Western markets, in Western technology, there's an attitude of preeminence. And I can't help thinking that that is very, very dangerous for Western companies and Western investors as well, just diminishing and dismissing what China and Asia has to offer as well. Is there perhaps a threat coming from China to those investors, to those valuations, to Western tech that has been undervalued? And in fact, and I say this in the spirit of your adventure following those Marco Polo footsteps.
That's a really important question. And when Marco Polo traveled on this route, he was only 17 years old. He was super young. He was spending the next 24 years to investigate all these countries he traveled to. He spent 24 years on the road. When he came back, accidentally, the book of the travels of Marco Polo was published. And essentially it was his words, but someone else wrote a book. But what that did was, he didn't, probably when he got on the trip, never thought, he catalyzed the imagination of the whole West, looking at Far East and thinking about, this is a nation I want to travel to. So he catalyzed the whole era of discovery. And so I think this is amazing. Sometimes it's a small thing that could lead to something bigger. Again, being an investor, I'm very cognizant of and the dislocations of the world. And we're investors, we're always looking for that something that's a special where the puck will go. That's very important, because if the world is uneven, and if you're an investor, you got to be able to travel or fly above and to be able to see and what's going on in different market, in different sector, in different geography. I think that's what we should do, being an investor. I never really look at other people to decide what I want to do, but I think we're all so busy. We love some certain narratives that becomes a little bit bubble for ourselves.
Right. Patrick, let me ask you very quickly about tech sovereignty, because the story, the tale of Marco Polo, was one about sharing the best of the best and bringing the best of one culture to another. It feels as though we're going to a different era where it's about making sure you have your own product produced locally, so you have your own tech sovereignty. How do you think about that story unfolding from here and the risk that could bring for investors?
Yeah, for most of us who've been around and observing market for some time, and we all know, there's a rhythm with the market swings. And also, I recently, before I just got on the trip, I was speaking to an anthropologist. He's at the King's College at Cambridge. This is what he said. He says, when you look at civilization, you must measure it by centuries. There is an underlying rhythm for every civilization by sporadic events. And when you think about things as an investor with such a horizon of centuries, it's difficult to make bets. But I think for investors, you really need to think about all these different factors, put them together, and your decision is the output of your own algorithm. But I think for the world, and one thing I must point out, as I stated at the beginning of my remarks, is we are between two ages. We are all human. Tax sovereignty, end of the day, it's a human-centric narrative. But we're moving into the exponential world. What does that mean? If the technology, for example, does 1% of change every day, that's what we're experiencing now. By the end of 365 days, the result is 37.8 times, not 37.8%. Right. So this is how much change we're going to deal with. Humans are not adapted to relentless changes. We're not so different from us 2.5 million years ago. So this is where we are. We need to respect and we need to value ourselves. And right. For us, the essential element for human is relationship. We're defined by our relationships with our family, with our friends, with our businesses, and we are human.
Yes, Patrick, that is a great point to leave it on, and we do appreciate you sharing your thoughts with us from some of your travels so far. Patrick Shomkas, founding managing partner, M31 Capital.